We're seeing a bullish sentiment driving up the NSE All Share Index. Your overall view of the market as it stands right now and sentiment that's dictating movement as we kick 2010 off?
Good morning, Alishia. Well, like you said, the market has started the year on a very bright note, gaining about 4% last week compared to the very slow start we saw in 2009. So it's encouraging to see that while the market came down about 35% last year, we're beginning to see some stability. And we think that in the next week or so, we'll probably see those gains begin to moderate because our view, for instance, is that we're looking at 2010 with cautious optimism. We think that action from the government is crucial to seeing the economy move forward, and of course the banking sector and other sectors as well.
Well, after last year's bad spell, the banking sector in particular seems to be looking a little bit more upbeat. I mean, are confidence levels where they need to be to see a sustainable run in this sector moving forward in your books?
Well, confidence is probably improved simply because valuations are so depressed. We think the downside risk is very low, and I think that's the broad view of the market. However, for a sustainable run, I think there is still some concern. For instance, when you look at the performance of the market in the fourth quarter of 2009, the impact of that on the banks could be important. Also, looking at the levels of provisions we saw up to September, with the market trending lower in the fourth quarter, we might see additional provisions. So, for full year results ending 2009, we might even see some banks' results being even worse than they were as at September. So with that sentiment in the mind of investors, I think people are approaching the banking sector cautiously.
We've heard news out in Nigeria that the Central Bank of Nigeria has endorsed the Banks Alliance to form a pioneer credit bureau in the country. This, of course, to oversee some of the risk management or make sure that proper risk management strategies are in place moving forward. How has the market reacted to that, and do you see it providing some comfort as we progress?
Well, it provides some comfort with regards to improvements of risk management for the sector as a whole. However, looking at the contribution of consumer banking, the consumer sector to the overall banking performance is still relatively low. I think the model most banks have run in Nigeria, those that have been successful, is to get cheap money from cheap deposits and to lend to the larger corporates. So that sector, that group of customers will grow over time. So it's not something that's going to make a dramatic impact on earnings in the short term.
Well, reading through a few reports, of course, in the coming months and perhaps until the end of the first quarter this year, many expecting growth to be driven by the banking sector for one. The other sector that stands in the spotlight is the building materials space. I mean, this with a sustained focus on the development of infrastructure in the country. What's your view on companies operating within that sector?
Yes, our view on that sector is largely positive. I think overall, in the first quarter, or perhaps even into the first half of this year, there will still be that preference for non-banking companies. And so as a result, we expect that that sector and other sectors outside banking will get support from the demand. But however, looking at fundamentals of that sector, we'll see that many players, particularly the likes of Benue Cement, are looking to increase their production, have increased their production capacity, and we'll begin to see the impact of that filtering through into earnings this year. There is a risk, however, for the sector. We've seen last year with the energy crisis, we saw impacting on earnings of some companies. So that is something that investors should continue to take a look at going into 2010. But starting 2010, we have a very positive view for that sector.
Well, certainly sentiment is also positive around the food and beverages space and the breweries as well. But just looking at a stock that has seen reaction to some news out, Cadbury falling back after it said that it raised just 17.5 billion naira, less than it expected to from its right issue. Just looking at that, what have you made of the uptake of that rights issue, given that sentiment is pretty positive? Were you surprised?
Well, not too surprised. As we know, Cadbury is owned. There's a huge percentage of the shareholding in the hands of Cadbury offshore. So I expect that they took up their rights in full, and other investors also went on. I think total subscription was about 85%, which is not too bad given the market conditions. I think that would definitely support Cadbury going forward. And it's all part of a broader plan to reposition the company after the scandals we saw about 2 years ago. So going forward, I think the outlook for Cadbury is definitely looking more and more positive.
To bear in mind here is that this rights issue came to the fore at a time when the bond market, the fixed income side of things in Nigeria, is gaining prominence as well. What are you expecting from the secondary market this year, considering that the FGN bond market has outperformed the stock market over the last 3 years?
Like you said, the fixed income sector did very well. I believe local index rated performance of about 20% return. But however, I think that when you begin to consider issues like rising inflation, like we saw in the November numbers, we begin to be concerned about the momentum of the increase of the fixed income market as a whole. We think that those gains will begin to moderate. A lot, of course, depends on how the government reacts to those inflation numbers. If, for instance, they begin to, maybe in the short term it's unlikely, but looking later into the year, they might begin to take a stance of mopping up money from the system. Then we expect that interest rates might begin to rise. So as a whole, we think the fixed income market, the returns will be much more moderate this year.